GCC regulators still require certified ID documents for non-face-to-face contact. How are these new technologies being received by them, and how they're open to how open they are to innovation? So Dr. Ryan, you are obviously regulated by one of the regulators in the region. What do you think?
Well, certified IDs, which goes to my point about the utility bill that got falsified. So you get the certified ID and you get the name of the lawyer with his number. You have to call the lawyer, verify he certified it. And so it's not a very practical approach. Face-to-face or video remains really the best way of verifying someone's ID. I think a certified ID would give a false sense of comfort, saying, yeah, it's certified, it's fine, let's file it. So this is what people tend to do. I'm not with that. I'd rather have a face-to-face or a video or liveliness test of some sort rather than a certified ID.
James, what do you think?
Jehanzeb.
Yeah, I'm seeing here kind of uncomfortable, like the idea of relying on a wet signature, you know, like it's not 1999 anymore. So look, I totally understand. I'm trying not to be flippant, but I totally get, you know, rigidity in emerging markets. I've lived it myself. But there's absolutely no way, as we scale, or as I scaled my last company or scaling Bloom, that I'd rely on a wet signature. If you're doing that in your process, something is fundamentally broken, and you are going to be the bottleneck for growth. And I want to just touch on one other issue. You know, we keep talking about the regulator having a hand in this, and you know, supporting it with them with new ideas, and I've done that in my career. All of that is excellent. But this also fundamentally becomes a question for government and politicians, which is, you know, how do we want to power our economy? How do we want to lead for digital growth? And I think if you get the banks in the room with the right fintech enablers, or with the right capital, right? Fintech's about capital. It's nothing particularly special. With the regulators, I think you could really make a sizable difference to a market and unlock cross-border payments, unlock cross-border business, unlock national business, remove the reliance on you know, oligopolies that exist in the world today, Visa, MasterCard, and others. So yeah, that's kind of my reaction, which is horror, which is you know, we're checking manually utility bills in markets today, but actually I'm so excited about the opportunity to get that right in the Middle East, because it could drive enormous economic upside. Fantastic. That was a long answer. Apologies, Jehanzeb.
No, thank you, Mohammed. You were going to say something. I'm sure this is close to your heart as well.
Yeah, it is quite. In fact, I mean, given that my core role is to license fintech companies, it becomes a nightmare. It becomes a nightmare to get a company which wants to do it and tell them you have to come in person just to certify your passport copy or digital ID or your ID documents. And had it not been COVID, we would still have been doing it. I mean, thanks to COVID, now we've kind of pushed them to do it on a Teams or Zoom call, and that's why it's happening. Otherwise, it wouldn't have happened. I think really, I mean, we need to move quickly. I mean, at one side, we have businesses that are coming and transforming the way things are done, but we still, as governments or regulators, want to stick with our traditional way of doing, be it KYC or doing business, and that's really affecting businesses, Jehanzeb. And this goes back to the issue of companies opening up bank accounts, all the way to setting up a company. We have to adopt technology ourselves as well as regulators and financial institutions to be able to cope up and for the economy to grow.
Thank you, Mohammed. I think I will add a couple of points here, which is, you know, in terms of, and I will name names here, the DFSA and the FSRA and the CBB and even SAMA and CMA, there is definitely good progress on this side. We have seen a good, practical, reasonable approach on this. You know, as long as we can do a liveness test, validation of a person being a real person and matching their ID through facial recognition, biometric sort of matching and all that stuff. That definitely is acceptable and is working. Sometimes based on the type of business, particularly in the crypto space, because crypto is still, yet in some places it's mainstream, a lot of places it's not mainstream. There is a perception that crypto businesses are high risk, which, I would say to some degree are well-founded, to some degree they are not. Again, there's a risk-based view that needs to be taken. But if you take a slightly higher risk view, there are requirements to get 2 IDs, et cetera, from the people that are coming in. I think that regulators are also learning and getting comfortable. This is going to be a phased approach. And one thing that we have seen, everybody, and maybe this is just my view, and I will ask panelists to jump in here, everybody wants to be Mark Zuckerberg tomorrow. And Larry Page tomorrow, and they want to scale up, and add 1 million customers a day, and so on and so forth. I don't think that's a lot of times when we meet people, that's the kind of impression that you get. But the opportunity is where the problems are, right? The whole point is to solve a problem to win an opportunity, and that's how you scale. So Middle East provides that. I think there's a massive opportunity. Middle East has never been able to scale because of the manual processes before. But now with technology, there's a massive opportunity to scale across jurisdictions, right? So and I think our regulators are also looking at it, and I have to give credit to a lot of the local regulators in moving the needle forward. But some of the more traditional institutions, some of the banks have to catch up with what the regulator wants to do. And what the financial institutions are doing, particularly, allowing the fintechs. So, Stuart, what do you think on that? Since you were the economic attaché here for a while, what are your thoughts?
Well, I mean, I agree with everything that's been said. I think that it's different than when I was the financial attaché. I mean, we talked about a decade being a long time. It was about a decade ago. It's hard to believe. I've gotten old since I was out there, Jehanzeb. But I think that it's a real opportunity, and I see I see action in the UAE and in Bahrain and in Saudi, and I think that action is certainly more important than studying a problem or talking about a problem or thinking about it. And I think it is a real opportunity, as everyone has alluded to, but it's still not over. We're still looking at utility bills, and I did sell a house in Abu Dhabi not long ago that required me to get on a plane and fly over to Abu Dhabi and sign something in person. So we do still have some of those issues, and I think even here in the U.S. Regulators can want to be innovative, but sometimes that doesn't necessarily marry up with real action. I think it was 2018, 2019, we had a joint statement by regulators here about being innovative, and our financial institutions are definitely trying new things and pushing into that. But when you go and really sit down for a cup of tea or a cup of coffee and talk about trying radical things that might actually unlock a lot of efficiency or help direct the right information to law enforcement, if it's outside of the manuals, the BSA review manuals, the banks just really kind of clam up when it gets to that point. So I think where there's talk, and that's more talk, I'm skeptical. But when I see action and I see governments coming together and forming groups and forming consortiums and forming utilities that banks can plug into and actually use, I think that's exciting. And as an entrepreneur, anytime there's a big problem, there's a big opportunity. And I think that the Middle East, from an efficiency play perspective, has to be one of the most interesting places to build a company to try to solve this, particularly given how critical the region is to international commerce.
And I think just one more thought, sorry to jump in. It doesn't have to be complicated, right? We don't have to start on crypto assets, because they're always going to be the thorny ones.
From my perspective, of course.
Okay, we control that in some markets, but actually, just get bank onboarding rights, right? Just get something small rights that can be then used as a digital authentication identity mechanism. And that will immediately start unlocking, the economic opportunity I think we're talking about here. And I think there's two or three really simple places to start that would be innocuous, but would clearly show the upside potential. And you just treat this like any kind of technology project, really. But that was my additive thought there, which is, let's not start on the really big, difficult things. Let's just start on a couple of tiny proof points that work across market. And, I think Mohammad is very well placed to be able to lead those in the region.
I'd just like to add three things to the conversation. First is from a consumer perspective, right? What we see is there's such an appetite, right, for the innovation in payments, right? And I think that it's important to give recognition to the region and the fact that, like Stuart mentioned, the UAE, Bahrain, and certainly those two within the Gulf are kind of leading the charge in relation to that kind of adoption of fintech and encouragement, right, for that kind of innovation, right? There's been a recognition there. And I think that that's important because the global consumer appetite continues to grow. The banks are kind of on the back foot in relation to that recognition. And so they're at a point now where it's kind of a critical inflection point where they have to make that decision, right, to embrace change. And I think when we begin to see that, they're going to apply more to this space. And we've started to see that. And there's disruptors as well. There's these digital banks that are beginning to be launched. And with it comes a new set of problems, right? For the regulators, bearing that in mind, right? The familiarity is an important component. And so I have sympathy with the regulators. And what I mean is, there was a conversation point that was brought up in this dialogue wherein somebody mentioned the fact that the regulators might not be sharing what they think in relation to a specific problem set. They may be developing what they think at the moment, right? Because innovation has been moving in a fluid pace that we haven't seen before, right? So regulation is built to be flexible, right? And technology agnostic. That's what the regulators tell you. With that being said, I don't know if they could have envisioned some of what we're seeing in relation to payments, right? And some of the new innovations. So it is progressive on both sides, right? And I think that context is very important to these kinds of conversations.
Yeah, I agree with you. I think in the Middle East, one of the key things that we're seeing is that a critical piece, which is the banking sector, is definitely lagging behind the others, right? That there's definitely fantastic policy initiatives by the governments, support by the governments. But then, again, and this is, I'm sure Stuart probably wouldn't like that, some of the OFAC related pressures that are in the region that basically make banks clam up when it comes to SME businesses and all that stuff, and the related fines that are happening in the US, et cetera. So it's a very difficult mix for the banks. Nobody wants to, lose the job as the CEO of a bank by taking on more SME risk that can expose them to. So there's a fine, I think, line here that people need to, and yes, as a consumer, as a small business, or as a fintech starting to run something and not getting, as one of our clients would say, not getting enough love out of the banks towards their business is difficult. And creates challenges. But I think I have a question here, which is quite an interesting one, specifically aimed at Jesse.